Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I am once again privileged to welcome a very good friend, a very senior and tall corporate leader from India, and a taxation expert, as well as a fellow member of the YPO from Mumbai, India, Mr. Jairaj Purandare. Jai, welcome to the show.
Thank you, Ashutosh, and thank you for those kind words.
Thank you. Jay is the founder chairman of JMP Advisors Private Limited, which is the leading advisory, accounting, tax, and regulatory services firm based in Mumbai. He has been the regional managing partner of PwC. He's the former chairman of Ernst& Young India, country head of the tax and business advisory practice of Anderson India, and as I mentioned, he's a fellow member of the YPO. Today, we're going to be talking to Jay about the budget, which is always a big topic to discuss in India. So, Jay, let me start by asking you, tell me a little bit about the key highlights of the budget 26-27 and how does this budget compare to previous years?
So it's interesting. This is, of course, as we all know, the ninth budget presented by Nirmala Sitharaman in her capacity as the Finance Minister of India.
Yeah.
And interestingly, this budget actually has arrived at what I would call a defining Goldilocks moment
Okay.
in the economic journey of the country.
Mm.
And what do I mean by that? I mean, effectively, that we are in a unique situation, pretty much amongst the only country in the world which has stood tall.
Mm.
And we are in a situation where we have low inflation and high growth.
Correct.
And relatively employment, I would say, under control
Mm.
or unemployment under control. So we are at a very interesting stage in our journey.
Mm.
And this is particularly interesting because of all the uncertainty that's happening around us, whether in the country or particularly outside. We
Right.
truly live in a VUCA world, as they say. And we've had a situation of a weakening rupee, tepid foreign investor inflows, and capital markets being pretty much flat, etc. And with what's happening in the geopolitics and the tariff wars of the world, India has pretty much been standing quite resilient.
Correct.
So it's very good that that has happened. But interestingly, lots of changes being made in the course of the last 1 year, including the labor codes, including the GST 2.0 reforms, etc., etc. So lots of good reforms and changes. And so this budget has arrived at an interesting moment, and the macroeconomic factors are pretty strong. And as I said, again, we stand pretty tall amongst the large economies in the world. We're pretty much heading towards becoming the third largest in a couple of years' time.
Yeah.
But if you look at the expected growth rate, again, projected for next year to be in the range of around 7%, real GDP growth, that's great. Fiscal deficit, again, on a declining path towards 4.3%. Excellent. The government is also looking at debt to GDP ratio.
Okay.
And it's around 55-56% projected for next year, slightly down from this year. And forex reserves, despite RBI trying to protect the rupee over the course of the last year, I'm sure they've spent $30-40 billion, is still hovering above 700 billion. So overall on the macroeconomic front, I think some very, very good news. In terms of the budget, I think one of the big changes that I see is that we are emerging from what I call a developing country mindset to a leader mindset.
Okay.
And I think that's an important change that's happening. And we seem to be now going more confident of ourselves as we approach the world.
Right.
I see that in different situations as part of what has happened during the course of the last year or so. So I think some interesting things, the focus of the budget, if you like, has been on a lot on infrastructure. There was concern whether the government would focus on infra adequately or not. But they spent 11 lakh crores this year and are projected to spend 12.2 lakh crores next year. So that concern has been allayed.
Yeah.
Although the focus on manufacturing is limited to 7 sectors, they've been very selective about picking those sectors. So is the semiconductor area, the rare earths, so manufacturing in particular focus areas like electronics. So it's quite interesting that the government has not done a lot of focus on manufacturing. I would have liked to see a bit more.
Yeah.
but nonetheless, they focus on what they believe are real value add and big areas. Focus on infrastructure continues in different ways, including waterways being introduced, including the rail corridors that they're talking about, 7 interesting rail corridors. Of course, some of the focus has shifted to the southern states, possibly giving the elections coming up there. But that apart, the fact is that the country is developing. But one big and interesting change this year also has been the focus on tier 2 and tier 3 towns as centers of economic growth. So I think that's really good. And they've actually committed to provide 5,000 crore rupees for each of these centers. So, they are now looking at these as centers of economic growth and not just the 4 or 5 metros all the time. And because we've been hearing the last 2, 3 years that these 20, 30 other cities in India are growing so rapidly, really building up, coming up well. So I'm glad there's a new focus, around that part of the thing. And tourism seems to have got a lot of attention this year. Tourism, temple towns, in terms of trying to make sure that, we use that to attract visitors, gives us not just dollars into the country, but also provides employment for a whole host of subsidiary ancillary sectors. So I think all very good in many ways. Focus on jobs. They've realized that I think the planned sector, the organized sector can't provide so many jobs with all the automation that they're doing and what is happening with technology and so on. So they're looking to spread that and, looking at training up and skilling for like corporate mitras to help smaller corporates in smaller towns. You have the caregivers being trained. You have tourist guides going to be sort of provided support and training. So I think there has been some degree of focus on the employment sector as well.
Very
So
interesting.
overall, I think no big bang reforms, a lot of changes, which I think will be good in the short to medium term.
So tell me, there's been a lot of talk about no small tweaks, no 1% reduction in income tax, etc., but forward-looking provisions. What is your perspective? People saying that this is a resilience budget, this is a budget for stability. How do you look at this on a longer term?
There's a new income tax law after 60 odd years, 6 decades of the old law. The new law comes into play on 1st of April.
Okay.
So I personally wasn't expecting too many changes, but there have been still several changes in the new law as well as some changes in the old law, interestingly, because the old law will continue in terms of all the litigation, etc., that is around. For the next few years at least, it will be around and people will be referring to it. But the new law, because it is new, I was not expecting too much change to happen. But nonetheless, they have made some changes.
Okay.
Changes which are more in the nature of, if you like, rationalizing things, simplifying things, and they've not yet announced the rules and the new forms. But hopefully that will soon see the light of day and hopefully they will be simpler as promised. But that apart, I think with the idea to incentivize certain areas, they've made changes. So, 2, 3 which come to mind immediately is the data centers. So, with the AI world happening what it is, we are hearing of tens of billions of dollars, if not hundreds of billions of dollars, being invested in data centers by the big tech companies.
Yeah.
So the finance minister has also just gone ahead and announced a tax holiday for anybody who's investing into data centers in India and to provide data center services. So all the income from data center services will now be exempt and will be exempt till 31st March 2047.
Okay.
Which is like 21 years to go as here. And that's of course, the centenary year for India.
Yeah.
So they've just blanket done that with the hope that they will attract big bucks into the country to be able to set up these data centers and use them. So they want to provide to the world that, look, we are known to be an aggressive tax country, but here is something I'm telling you, no tax on these things. So next 2 decades, you can set up, use the data centers and no tax.
Very interesting.
Other interesting thing is, again, electronics. They've provided for a 5-year tax holiday for contract manufacturing of electronics in India. So if you provide capital or other things, they will be exempt from tax for that 5-year period, right through till March 31. So I think both forward-looking changes and both changes which are stable, provide stability over time. So I'm just mentioning a couple of these,
Yeah.
but I'm sure during the course of our
Yeah.
conversation, I
Yeah.
can mention a
But
few others.
Jay, there is also a lot of talk about simplification of compliance. The budget mentions simplified income tax rules, redesigned forms. In practical terms, what changes can taxpayers expect in e-filing and compliance?
So we are yet to see the new rules and the new forms,
Hmm.
but the government has promised that they will be simpler.
Hmm.
They have also gone ahead to say that Form 1 and 2 will be a simplified form. You will not need advice and input from your chartered accountant. You should be able to do things much more on your own.
Hmm. Hmm.
They've tried to do that, one. Second, they've tried to provide some degree of stability, which shows more confidence and reassurance
Hmm.
on the part of the government rather than, tinkering and tampering with things every year.
Right.
Although the buyback, and I'll come to buyback separately,
Yeah.
there has been one more change. It's a ping
Hmm.
pong game with buyback, but
Hmm.
we'll come to that.
Okay.
So the other important thing for the small investor has been that, if you want tax not to be withheld
Hmm.
on your dividends, etc.,
Hmm.
then you had to provide certain forms, 15G and H,
Hmm.
to various companies in which you had invested.
Hmm.
Now you can just provide one single form to your depository, and it is the depository who will then communicate with all the companies concerned, and you're done with filing one form.
Wow.
That's it. So,
Hmm.
that just eases up things as
Hmm.
an example. They've also tried to provide some degree of simplicity in the context of stability and certainty by saying that, for example, safe harbor rules. So, they've combined various definitions of ITES, software
Hmm.
development, KPOs, etc., into one broad basket for IT services.
Hmm.
And they have gone ahead and said that if you offer a markup of 15.5%, then that will be treated as a safe harbor. And at your option, you can continue this for 5 years
Hmm.
and nobody will question it. It's
Hmm.
on an automated basis. And mind you, this rate is much lower than the rate currently being applied, which is
Hmm.
more in the range of, if you like, 17, 20, even 25% in some cases.
Right.
So
Right.
this is offers tax relief, offers certainty, stability, and simplicity.
Very
So these are
interesting.
just some examples of
Correct.
what has been done.
Correct. There's also a talk of the prepayment of income tax has been reduced from 20% to 10%. Does that have an immediate impact on cash flow of individuals?
So I don't know about immediate, but let me go back to the logic of this.
Okay.
So when a tax assessment was done on you,
Hmm.
and if you had certain disallowances, then there used to
Hmm.
be a tax demand.
Hmm.
If you wanted to challenge that in appeal, then the guidance was that you had to pay 20% of the tax and file your appeal to the commissioner.
Hmm.
What they have now done is that they have introduced a provision to say that penalty will also be charged if it has to be charged at the time of assessment, simultaneously with the assessment order.
Hmm.
In the past, with your assessment order, you got a notice to show cause why penalty shouldn't be levied.
Hmm.
They will now do this as part of the assessment process. And when the assessment order is finalized, if penalty is to be levied, they will levy tax and penalty.
Hmm.
So their argument is that if you are now paying tax and penalty, that's a higher amount. So instead of paying 20%, we will now request you to prepay 10%. So I don't know whether it will, in quantum terms,
Okay.
will have a
Right.
reduction or
Yeah.
not. It really
Okay.
depends, if penalty is being levied on you and what the effect of that penalty is going to be. But
Okay.
they've recognized that fact.
Hmm.
But basically, they've tried to combine the two because there used to be separate litigation for the two separate streams, the assessment and the penalty. Now it will all be combined into one. It will be accelerated, and you have to pay up to 10%
Hmm.
rather than 20%.
So this prepayment is nothing to do with the advance tax.
No, 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 no. The advance tax thing
Is
will continue
will continue.
without any
Because someone
change.
told me that there is a possibility that the advance tax will be reduced. So I said that could have an impact on cash flows, but now I
Well, if
understand.
you are paying advance tax, we can talk about it, Ashutosh, and I can separately offline tell you why you may not need to pay advance tax.
Okay, that's a separate discussion. Thank you. Let's now talk about the MET changes for non-residents.
Right.
With MAT exemption for non-residents on a presumptive basis, how might this influence foreign investment with the treaty interpretations?
So again, let me clarify a few things here. What they have done is that MAT for foreign companies which were covered by certain presumptive tax provisions wasn't there. It was exempt from MAT, didn't apply. For example, shipping business, exploration of mineral oils, certain civil construction and turnkey projects, or operation of aircraft. These were taxed on a presumptive tax basis, 10%, 5%, whatever. What they've done is they've extended this to two other items, which is the business of cruise ships, operation of cruise ships, and electronics manufacturing facility. So if you go under presumptive tax for these two categories, then MAT will not apply. So it's just been extended to these two sectors. The change that has been made in MAT otherwise is a little different. And since you asked on MAT, maybe I can dwell with that, although that was not your question related directly to this. What they have done is they've now made MAT a final tax. And what that means is that if you were paying tax under the MAT scheme, you paid that, but to the extent in future years, if your tax liability was under the normal provisions, and the difference you could set off, you could, that MAT which was unavailed, you could set off and apply it to reduce your tax liability going forward. What they've done now is they've reduced the rate of MAT from 15% to 4%, but I've said that no more accumulation of MAT credit beyond 31st March. So whatever you got up to 31st March is what you have, nothing more will accumulate.
I see.
If you remain in what they called, what she has termed as the old scheme, which is your normal rate of tax as earlier, then you will, that is a dead loss. That MAT which you accumulated credit is gone. However, if you move to the new 22% corporate rate tax scheme, which has certain limitations on allowances, certain allowances, in that situation, you will be allowed the credit of your MAT which you've accumulated up to March 26, but only to the extent of 25% of the tax liability every year.
Very interesting.
And the ostensible reason given is that you should not focus on claiming deductions, etc., but focus on doing your business.
Absolutely. Absolutely. I've got two more questions related to direct tax, then I have a few questions on indirect tax.
Sure.
There was also talk of the standard deduction and filing timeline. With staggered ITR filing deadlines and potential standard deduction changes, how should individuals adapt to the next financial year?
So first of all, there are no changes vis-a-vis standard deduction. So it remains what it was. There's absolutely no change. The big bang change for individuals came last year, when the limit was raised to 12 lakhs, and that sort of made everybody happy. When it comes to timelines, what they've said is that while individuals who don't have business file their tax returns by July, there are certain businesses which do not require an audit, or certain professionals, because they don't have large revenues or fees, do not require an audit under the tax law or any other law. In that case, we will allow you 1 more month. So that date has been extended for them from 31st July to 31st of August. So that's a 1 month extension given. The other change they've made in terms of extensions is that if you filed your return, let's say you're a corporate and you subject to tax audit and transfer pricing, etc., and you filed your return by 30th November, if you wanted to revise your return because you noticed that you made some mistake, then you only got 1 month. You had to file the revised return by December. And some people who filed belated returns got no time at all. What they have done is extended this period by 3 months. So you can file a revised return on the payment of a nominal fee up to 31st March. So you've got 3 months more, basically, in some cases. This case of corporates, which you file the return by November, up to March now. So it is an extension of the time deadline, in a sense. So more time allowed you to, if you notice, after 31st March, what happens is then you need to file an updated return. If you declare higher income and pay 25, 50, 60%, etc., of the additional tax on the additional income.
Okay. One more question, which is relating to the foreign asset disclosure scheme. The budget proposes a one-time disclosure scheme for small taxpayers with foreign assets. What are the compliance and risk management implications for individuals here?
So this is an intermingling or application, if you like, of two laws, the Income Tax Law and the Black Money Act.
Okay.
So Indian residents, tax residents, as per the requirements of law, were required and are required to disclose as part of their return if they have income from overseas, foreign sourced income, and if you had any assets overseas, then those assets as well. Both of these need to be disclosed. For the last year and a half, if I remember right, since around October of 2024, the government has been putting out, these press releases and so on and so forth, and they made it very active, if you like, in the last 4 5 months, including what they call the nudge scheme. They wrote to corporates to say that if your employees were granted ESOPs and they've not declared these, please tell them, that they should declare them.
Yeah.
Similarly, they wrote to chambers of commerce like CII, FICCI, ASSOCHAM, to tell members of CII, member companies, etc., to write to them saying you must declare these. Now what they've done is, so based on that, a lot of people did come forward and made these disclosures. They are giving one more opportunity for people to make this disclosure. So what they're saying is that they will notify this scheme when it's made to be made applicable. But if you have not declared your income, foreign income or foreign assets up to 1 crore in total, then you can pay 30% of the income as tax and 30% of the assets as tax. And if you and come clean, and if you want to avoid penal provisions, prosecution in particular, then you pay another 60%, and then we will protect you from any prosecution. Otherwise, under the black money law, you could be prosecuted and could end up going to jail.
Wow.
There's a second one that if you declared income but did not declare the asset, then you can do so up to an asset of 5 crores, and you have to pay only 1 lakh rupees to come clean.
I see.
So they've come up with this scheme, which will probably be applicable for 6 months, but they have not notified the date when it will become applicable. So we'll know soon enough. I don't know why they've restricted it to 1 and 5 crores. Maybe they could have been more liberal, but maybe they want to take action against the big fish, if you like.
Correct.
And, interestingly for your listeners, now, unlike, in the long past, under the tax treaties that India has, there is a lot of exchange of information, sometimes twice a year, under FATCA rules, etc., etc. So the Indian government pretty much has, if you like, information about Indian residents having bank accounts overseas, assets or income overseas, etc. So, I think this is a last opportunity, if you like, to taxpayers to come clean.
Amazing.
Sorry, I dealt with it with some detail, but
yeah, no, I'm glad you did, because these are very important. These are very, very important. Let's now move to indirect taxation, Jay. The first one is I want to talk about is the securities transaction tax. With hikes in the transaction taxes on derivatives, how could traders and fund managers recalibrate their strategy, and would there be an impact on individuals?
So, the ostensible reason for that, and the FM has clarified this in an interview she gave yesterday, is that there's been so much trading in futures and options that, and SEBI, I don't know if you're aware, but SEBI had reported a few months ago that there are 93% of the investors in FNO are making losses.
Wow.
So we don't hear about the loss situation. We only hear about people making the gains. So the FM has gone on to say that, look, he's received many complaints and so on. The youth and even others are trading in FNO, and they're really losing money, and it's hurting them emotionally and mentally. It's probably having an impact. And she says it is the duty of government to make sure that we don't necessarily tell you where to invest your money, but if we are finding that you are really getting into problems, we want to take some safeguards. So that is the ostensible reason given to increase the STT rates. So I think this will although STT business had gone down, if you like, investments had gone down somewhat in the last few months. But nonetheless, this is meant to discourage you from investing in FNO. When it comes to individuals, this is fine. But there are hedge funds, there are larger traders, etc., which are non-individuals who are educated, they know the market, etc. But even they will be hit by this extra cost. So I don't know whether that was intended or not, but even those will be covered. If the reason was to protect the interests of individuals from making huge losses, then perhaps they could have restricted that to individuals or smaller transactions, but not the case.
Very interesting. There's also a lot of talk on GST reform. How effective are the anticipated GST reforms in tackling compliance complexity and boosting growth, particularly for smaller businesses?
So, there are two things. Well, first of all, the GST reforms, at least we were not expecting anything major here because it is the GST Council which deals with a lot of these changes.
Yeah.
And the GST Council a few months ago, as you know, just before the festival season, announced major reforms, including
Correct.
significant reduction in rates. So we were not expecting major changes. There have been a few changes made to simplify and rationalize things. But one or two big changes is that often people lose the input tax credit in the context of GST because of failures not on their part, but on the failure on the part of the supplier. So they've now tried to simplify that and said that, look, you don't need to go into that detail. If there is an appropriate credit note with proper reference, then you should get the benefit of the ITC, irrespective of what has been done by the supplier, so long as you have a proper credit note with you. This had got into a lot of litigation and courts were typically ruling in favor of the taxpayer. The second other important thing, which is impacting all businesses, including smaller ones, was in the context of exports. And there was a little bit of confusion as to what is the meaning of an intermediary and intermediary services. They are now clarified to say that if there are these services, then it will be treated that the supply of service is at the place of the recipient. So if you are exporting from India and you are being denied export benefits in the past, which is zero rated tax, no tax, then that was now done away with. And now you will get the benefit of it being treated as an export and therefore not to pay GST.
I see.
So this eases up things for a lot of businesses, including the smaller ones. It also makes our exports more competitive. With clarity, now you don't need to charge that 18% or whatever GST, and therefore you can be much more competitive in the global market.
Amazing. There's also been talk of customs duty rationalization. With exemption and rationalization of customs duties on key items proposed, are industries likely to benefit? And if so, what could be some of the unintended consequences?
So customs, there's been a lot of change. And I think we will see a lot more changes happening in the next 1 or 2 years in the customs area. And I think this is particularly relevant, Ashutosh, because we are now entering into many FTAs. I mean, just today we heard the news of the US reducing tariffs on India to 18%. We'll see as more details are announced what that means. But it's clearly a welcome move because I've seen the sort of messages from both the Prime Minister and the President of the US. But there are several changes in the customs area. They've rationalized rates, tried to remove inverted duty structures, etc., etc. Brought down duties. So, a lot of countries accuse India of having very high tariffs. So, several areas, they have actually reduced the basic customs duty, which has an overall impact. The FTAs will, of course, help way beyond this. But clearly, I think India is seeing that we need to be more competitive. Also, when you have imported inputs for the purpose of exports, the cost goes down, making our exports more competitive. That's the other thing. They have announced the setting up of a CIS platform, which is like a single window clearance to enable easier imports and exports. So I think that's a big change. Rationalization of rates I've mentioned. The other thing is, I think a lot of digitization initiatives have been taken in this space. I think that's going to help a lot. The other thing is that, when you import goods into India, there is a feeling of a lot of intrusiveness on the part of the customs authorities. They're trying to remove that. So they're getting scanners instead of customs officers opening containers. They're getting modern scanners, etc., to be able to scan that. This means that the goods will not lie at the port for long periods. They'll come out much shorter, working capital will be reduced, costs again will go down, whether for manufacturing in India or for the purpose of export. So I think these are all very good changes. And of course, they've also made some changes in the personal baggage rules. So, the 50,000 exemption has moved up to 75,000 and the rates are now down to 10%.
Very interesting.
So I think we'll see more and more changes in the customs area as we see over the next year or two.
Life will become much easier, I guess,
I hope
moving
so.
forward. And my last question, as a long-time observer of budgets of India, as an expert in this area, are there any areas that you would have liked to see in the budget that were missing?
So 2 or 3 things I would say. I think if India wants to make it big and wants to meet the aspirations of the youth, you have to provide them employment.
Correct.
You have to export because we can't ignore one of the big things is that we've seen falling FII, FPI, FDI, inflows into India, and we need to do that much more. So perhaps we could have made a few changes which would have sent out more bolder messages to the world at large that India is a stable destination. We are open, come. We are here. We are reforming. We are here to welcome you. One. And it could have been done in a couple of areas at least. One area is that while manufacturing has received a focus, I think that is going to be very important for the country. So while there's a focus on these 7 high profit, high focus areas like semiconductors and so on, I think the broader benefit, to manufacturing, I didn't see anything on that. It was very focused in these 7 sectors, nothing beyond that. I think we need to do much, much more to be able to get into the China plus one space. We've lost ground, if you like, to Vietnam and Malaysia and all of those countries. And we need to regain that ground if we want to really make an impact. So I think manufacturing is one area. The other area, somehow I've not been fully able to understand, although the finance minister mentioned a lot about AI, 10, 12 times in the course of her budget speech. Actually, the budget investment for AI has been halved compared to last.
Okay.
So it's a little confusing and I'm not sure why. I hope India does not lose focus. And, I heard Minister Vaishnav at Davos speaking about a lot of focus in the AI space because I think the IMF president, if I'm not wrong, mentioned that India is not in the top tier of AI countries like US and China. And he was responding to that.
Correct.
So I would have liked to see much more focus on AI.
Very interesting.
Employment, I think there's been considerable focus, but there has to be some more things. I just think that we need to let go, if you like, and we shouldn't be in a world where the license Raj or the approval Raj becomes the regulator Raj, and we still have an overhanging burden of regulators giving approvals for each and everything. So we need to move more into a trust-based, technology-driven society. And I think that will just help if we cut out the bureaucracy.
Absolutely. But on
we
that,
didn't get time to touch on a few things like buybacks,
why don't we cover it? Please talk about it.
So I did want to touch on a couple of things. One is, of course, quickly the TCS. I think that's a welcome move because TCS has been introduced to leave an audit trail so that people make sure they declare their incomes. It was not meant to be a tax collection move. So rates of 20%, etc., which existed were, I think, quite inappropriate. And, I have, over the last couple of years in particular, discussed a lot with Ministry of Finance and CBDT in terms of reducing rates. They had made some changes a year and 2 years back, last year as well. But now I'm very happy to see that things like medical and education will only attract a 2% TCS, which is good news, And of course, overseas tour operator packages as well is down to 2%. So it's good for, people who want to visit overseas on holidays. So I think that's one very good move.
Right.
The other move is, which I mentioned on buybacks. It's almost been like a ping pong game. Earlier it was taxed as capital gain, moved to dividends, and it's been back and forth. They've now moved to a situation where buybacks by companies will be taxed as if they are capital gains. And they have reduced, obviously, the rate of tax for capital gains is for listed companies 20% and 12.5% for long term, for 20% for short term, which is good. Everybody knows that this is what it is. It's a lower rate of tax, and you can reduce, if you like, the cost. And it's only the gain which is taxed at 12.5% or 20%. However, because in the past, promoters were known to have taken advantage of the arbitrage of different tax rates.
Right.
She's actually carved out and said that for the purpose of buybacks, promoters will be taxed if they're a domestic company at 22%.
Okay.
Which is your normal rate of tax for a domestic company, or in all other cases at 30%. So that is an interesting change which is made. I hope they now stay with it, because I think stability is the name of the game.
Correct.
And you don't want to keep making changes and cuts and hops and all around.
Correct.
So I hope we stay with that. But an important change, which I think generally will be welcome. And the third big area is transfer pricing. I made a reference to it.
Yeah.
This is very important from a foreign cross-border transactions point of view. So they've tried to simplify it. They've tried to bring in safe harbor. But the one thing I ignored to mention earlier is that transfer pricing, even for some of these services like KPO, ITS, applied only up to 300 crores. They've now upped that limit to 2,000 crores.
Okay.
So, other than the large companies, lots of the small and mid-sized companies will get the benefit of a 15.5% markup, and it will be stable, safe harbor, automated process, and will not be really questioned or scrutinized. And you can opt for it for 5 years.
Right.
So again, some of these messages coming through in the budget that keeping things stable for 5 years, 7 years, 20 years, they've extended the tax holiday, which I didn't mention, for OBUs, offshore banking units, from 10 years to 20 years. And from other units in the IFSC, from a 10 out of 15-year holiday, it has now been made 20 out of the first 25 years. So, that's really taking it long term and inviting investment into the gift city and so on.
Amazing.
So that's good news. Some of these are very positive signals in terms of a more confident nation setting out things for a medium to long term rather than cutting and changing and every year.
Amazing. Every time I speak to you in today's conversation, I always get the positive, upbeat message from you, and today's message is strong. And I'm glad we are speaking after the US-India treaty, because
there seems to be a very positive sentiment all around.
Correct. So not only the stability, but the sentiment also seems to have increased. But thank you, Jay, for speaking to me. I think your points were very, very interesting. My viewers and listeners enjoyed last year's conversation, will enjoy this year's conversation even more, because you have this amazing ability of simplifying a very complex topic, which most of us are not able to understand easily. Thank you for speaking to me, and good luck to you.
Thank you, Ashutosh. It's been a pleasure.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.